Hi guys, Will here, and what we'll discuss in today's video is the one and only thing standing in the way of most traders' ability to consistently make money. If you solve this one problem that we're about to discuss, you're profitable. So with that, stay tuned and let's get into it. Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So a fundamental step forwards for newer traders tends to happen when they understand probabilities, okay, and risk balanced with return. And look, I know what you're saying to yourself right now. You're thinking, God, this is going to be a boring video, right? I know, but from experience, stay with me here. A solid understanding of both of these things, probabilities and understanding risk balanced with reward, is usually a key turning point in a trader's career. It certainly was for my own trading journey. And if you're a trader who's watching this video right now and you don't fully understand those key points, again, probabilities and risk balanced with return, this video will hopefully trigger a key turning point within your own trading like it did mine. See, initially, when we experience a run of losing trades, okay, so let's start here. As humans, it's completely natural to worry, isn't it? We're losing money in that scenario, so of course we aren't going to be particularly happy, right? But in trading, as long as we have an edge, all we're seeing here in this run of losses is probability playing out in front of us. And understanding this alone is a massive step forward for a new trader. That's the bottom line. We can experience a run of losses, and in fact, at times a large run of losses, and still come away profitable due to us having edge. Now, let me pause here and explain that as long as you have a statistical edge, proven via data, you can always trade with confidence long term and expect to consistently make money due to this edge, right? And in fact, we've actually just received some feedback from a relatively new client of ours called Bruce on this topic. So let me just bring this on screen for you. And this guy's performance and his feedback really lays out and makes this point regarding what we're going to cover here today incredibly well. He says, I'm trading Will's session momentum and price reversion strategies. I back tested 2 years of data. I then followed the markets across 12 weeks to just watch the edge play out whilst not actually trading. And then he goes on to say, since actually going live, I've increased my accounts by 16% in just above 1 month, risking 0.5% per trade. And I'm only at the screen for 2 to 3 hours per day. And today alone, I've increased my accounts by a further 2.5% with less than 2 hours of chart time. And most crucially, listen to what he says when it comes to edge. Really take this in. Is every trade a win? No. Is every day a win? No. But over the long term, and by combining more than one strategy to help level out the ups and downs, this brings solid results. And just to prove that Bruce is a real person and that this isn't a fake review, I'm just going to bring on screen his time-stamped and date-stamped transaction receipt from our payment processor. So by this stage, you'll probably be thinking one of two things. You'll either be thinking, right, well, I know I have edge, so I'm in a solid position. I just need to focus on perhaps risk management or understanding my performance data, or maybe adding in another strategy to aid diversification like Bruce. And as long as you have strategies that provide edge, you're in a great position and you're going to win in the long term as this edge plays out. Or on the other hand, you may be thinking, well, look, I don't have a strategy that provides edge. I don't know how to build statistics. So, no reason I'm stuck and I'm still losing money. Can you help? And if that is where you are, I actually put a training video together a while back now. And don't worry, it's completely free. And you can find that here on the channel. I'll bring it on screen for you right now. And that walkthrough will solve that problem for you. Again, it explains edge. And I also begin building a strategy with you in that video too. So definitely head over there and watch that next if you haven't seen it. But coming back to what we're discussing here today, how can you have losing trades, losing days, losing weeks, and so on, and still remain profitable? So I know from experience that a lot of new traders can't quite grasp this. And this is where the importance of knowing your strategy's win rate, or strike rate, or win percentage, whatever you want to call it, comes in and is so crucial. Why? Because we can use this knowledge of our win rate to study, to expand on, to place, and to refine our targets. So let's say your strategy has a 30% win rate. Okay, it doesn't sound like much, does it? But let me share a story of a trader that I know, a friend of mine. So his win rate has never been much above 30%. His losses are typically very small, tending to average roughly 0.4, 0.5 R, if I remember correctly. And his wins, however, are either small or very, very large. Now, I'm sure you can see where I'm going with this, can't you? Point being, when he has a winning trade, which will either be a small win or a big win, it's that rare handful of big winners that actually make him profitable, that push his account equity ahead. And I know from experience that it can be a real slog sometimes when trading a low win rate strategy. It really can. And they aren't for every trader, right? Some people can't handle the down weeks, the down months, the down quarters. But it's part of trading. It really is. And if you, the person watching this video right now, can just find a strategy that provides edge, and from there manage risk and allow that edge to play out, you will make money consistently. If that is what you want, all you're missing is a strategy that provides edge. That's it. And by the way, just very quickly, if you are learning something here today and you are enjoying the video, it'd be really great if you take just a quick second to hit the thumbs up button. You won't need to pause the video or anything, just exit full screen. If you're watching in full screen, tap that thumbs up button, and yeah, I'd really appreciate that, as it helps to show the video to more people, and that'll mean that I can help more people. Again, I'd really appreciate that if that's okay with you. So think about this, back to the trader we were just discussing. Now, if I remember correctly, and this may have changed by now, but I remember him telling me that his largest win that he's ever had was, I think it was 31 or 32 R. Okay, here's my point. He could have a terrible quarter. He could draw down his accounts by minus 25 R, even minus 30 R. And that one winning trade still leaves him profitable. That right there is edge. But let's look at this the other way around. So if we take my session momentum strategy as an example, that has a win rate up as high as the 50%, 60% plus range, depending on the profit target in use. So for example, the lower the target, the higher the win rate. Okay, meaning that the strategy provides winning trades much, much more often than losing trades. But these wins are small. In balance though, these winning trades might be small, but their consistency provides us with enough profit to easily withstand a run of losses. This is risk balanced with return. Now, one thing I should just add here though, and this is strangely something that a lot of new traders tend to overlook actually, is that win rate continually changes and evolves with each trade. So you might take your last, let's say 100 trades, okay, and your win rate maybe, let's say 60%, to keep things simple, but your next 2, 3, 4 trades may all be wins. So your win rate's no longer 60%, is it? Maybe now it's beginning to come up towards 63% or 64%, and that will be different by the end of the week, by the end of the month, by the end of the quarter, and so on. So whenever you hear someone say this strategy has a win rate of, what they actually mean is right now it does, or looking at my current data set, it does. So let's visualize what the above variation strike rate actually looks like, along with the probability of a run of losses. What we see here is a visual representation of how win rate impacts trade sequences. And in fact, take a screenshot of this and perhaps add it to your trade journal, print it out for your wall, as it's a quite helpful tool. On the topic of the risk that you're currently taking on each trade, and again, win rate dependent, here's a question for you. Are you managing risk with the level of efficiency required to actually make it through that inevitable string of losses that your strategy is going to yield? As you can see on this table, with a strike rate even as high as 60%, statistically it's not out of the question to expect to have 7 or more losses in a row at times. That will happen as the law of large numbers plays out. So next time you have 5, 6, 7 losses in a row, Remember to put a focus on respecting probability as it plays out, rather than throwing in that towel before the winning trade that you actually need comes along. And above all, most crucially, make sure that you have edge. As long as your strategy is statistically proven to provide edge, all you have to do is just stick to the rules, stick with your process, and actually allow probabilities to play out. Okay, and you will always make money long term. So to conclude, know your strike rate first and foremost, and use this to your advantage. If you have a low strike rate, it's essential that your winning trades are large and that your losses are kept as small as possible, never exceeding your maximum risk. Alternatively, if you have a high strike rate, again, assess the size of your winning trades in comparison to your losing trades and just refine your targets if required to make sure that you're always coming out ahead long term. And if you do need any help with this, have a look around the rest of my channel here on YouTube, as I have put together other videos specifically on the topic of managing risk, what the R principle is, and so on. Just before I leave you, if you are someone who'd prefer not to do all the days, the weeks, the months of hard work, uncovering edges, building the data, all of the trial and error, and so on, I do share the strategies that I trade and that Bruce, who you heard from earlier, trades too, and you can find those over at the Join My Community page of my website. Within each strategy course, I've literally done everything for you. You're being handed a ready-built strategy, all of the data, all of the relevant risk management information, and so on. So again, if you'd prefer to just sidestep the work and just be handed a strategy that actually provides edge, that works, that option is there for you if it would help. Anyway, hopefully today's video helps. Hopefully that's added value for you all. Again, I'd really appreciate if you take just a quick second to hit that thumbs up button and drop me a comment if you would. But that aside, I'll leave it there for today. As always, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, guys.